It's earnings season, baby. You know what that means. The companies, they're all revealing what are they doing? How has their performance been? First, off the top, Square coming in with a monster Bitcoin revenue number. $1.82 billion. That's a billion with a B, not an M. $1 billion, $1.82 billion in Bitcoin revenue in Q3. Jack Dorsey, the CEO and founder of Square, one of the best entrepreneurs of our lifetimes, was asked, is Square thinking about adding other cryptocurrencies to Cash App? He said, we're not. Our focus is on helping Bitcoin to become the native currency for the internet. We have a number of initiatives towards that goal. And inside of that quote, it's really small, so I'll just paraphrase it. But basically what they say is he's like, look, we have everything from a hardware wallet that we're working on to a mining device to also software. And so Jack Dorsey is focused. He has laser eyes, you could say, right on Bitcoin. They are focused on helping Bitcoin to become the native currency for the internet. It is paying off in spades, $1.82 billion in Bitcoin revenue in Q3. But Square was not the only company to go ahead and actually put forward their earnings. Peloton came out and the shares fell 25% after the company reported earnings. Peloton fell off an absolute cliff. And so Peloton, for the first 3-month period ended September 30th, Peloton reported a net loss of $376 million, $376 million net loss. Their revenue was $805 million versus the $810 million that was expected. Sales and marketing surged 148% to $284 million. So literally they had to more than double the sales and marketing expenses. And then Peloton's gross margin in the latest quarter fell to 12% from 39% a year earlier. So really, really tough quarter for Peloton, 25% drawdown in that stock price. Now, when we think about why is this happening? Why is something like Peloton, which was the darling of the pandemic, everyone rushing out to buy Pelotons to work out in their homes? Well, people are returning to gyms. Other companies have created other types of competitive products. The supply chains means that bikes are actually delayed. The price of the bikes has been pushed down. They've slashed the price, so less revenue. And they also have been forced to cut forecasts for future months. So when you start to add up all these different things, there's a lot of pressure on this specific business. When you look at people just simply going back to gyms, means that some of the demand that might have been there if they've been locked in their homes forever is obviously going to dissipate. Then when you look at the increase of competition, Peloton is great. I've ridden it before. I like it. But there's now many other things that you could buy that could give you a workout at home in a connected fitness way. And then, of course, the supply chain. The supply chain is delayed. There's all sorts of issues. And so Peloton struggling at the moment. Now, Airbnb, another company that has seen a really interesting couple of months since the pandemic started. Earnings per share, $1.22. The revenue, $2.24 billion, which came in almost 10% more than the estimates. 79.7 million nights and experiences booked in the third quarter. Slight decrease from the second quarter, but their net income, the amount of money that they make, pour it on, baby. 280% increase to $834 million on a year-over-year basis. So Airbnb doing pretty well. Yes, the nights and experiences booked in the third quarter was down a little bit, but their profitability, they are really focused on trying to become a more profitable business, going pretty well. 280% year-over-year growth for a business of this size is impressive. We then have Pinterest. Old Pinterest, 6% surge after hours. Their revenue per user increased in a meaningful way. The adjusted earnings per share, 28 cents versus 23 expected, almost 20% or so increase in what was expected. The revenue was $633 million versus $630 million expected. Revenue climbed 43% year over year. Massive growth for a business of this size. And monthly active users now coming in at 444 million monthly active users. This is a big business. There's lots of people using it. And revenue is climbing at a very steep rate. When we start to look at these businesses, the reason why we select these ones specifically is you have somebody like Square. Square is all in on Bitcoin. They're going to continue to focus on it. They not only are going ahead and getting very big numbers at $1.8 billion in quarterly revenue, but also they are working on all sorts of things that have medium to long-term payoffs around that hardware wallet, that miner, and other types of software. But then when you start to get outside of something that is so focused on financial services and Bitcoin, you look at these other businesses, whether you are talking about Peloton, Airbnb, Pinterest, etc. These are all being affected by the changes in consumer behavior as we now are more than a year after the pandemic started. You have people who are starting to go back into the office. You have people who are going outside. You have people who are going to social events. And they're spending less and less time on their phones and their computers because now they have other things competing for their attention. Probably from a mental health standpoint for our population, it is good that people are not sitting at home anymore, that they are allowed to go out and actually act like real humans, interact with other people. But you are going to see very serious impacts to many of these businesses. Some of the businesses that were absolute doggy poo-poo for the pandemic, like the airlines, etc., they were really struggling. So people were going and moving their capital into other businesses. Oh, people aren't going to fly, but they're going to go and they're going to buy a connected home fitness device. And so therefore, I should take my money out of the airlines, which means the airline stocks went down, and I should move it to Zoom or to Peloton, etc. Now, as we go back to some state of normal life, what is going to happen is not known by anyone. But we do have a good sense that more and more people are going to go back to what the world looked like before. You'll have much more people flying on airlines. Plenty of people are still using Zoom, but maybe it's not going to have as much growth as it had over the last year. So remember that when you are evaluating these companies, do not use the past as a perfect measurement of what's going to happen in the future. Just because they've had big growth in the past or price has gone up does not mean that that is necessarily going to continue.